right. So what I'm going to do is just go over this Dow and just a trend and a counter trend and explain what happened. So basically, we'll take a look from right over here and then analyze the downtrend and then analyze the counter trend upwards. So what happened here is that you had a effort to go up. Now you could see that this is a significant effort to go up. How do you know? It's the biggest wave in at least 10, the most volume in at least 10 waves. And the brick right over here had excessively high volume. That brick had more volume than 73 bricks. So what's that telling you? It's telling you with all that volume, and this market was at resistance, by the way, the overall context of it was that it's at resistance and it's trying to break out. So this concerted effort to try to break out with a lot of volume, and what did it lead to? Immediate immediately goes down. So basically, the sellers overpowered the demand right here. The sellers overpowered, or they, how should I say, this is distribution in this brick. All right, so there's a lot of volume to go up, to break out at resistance, but the sellers are there, and demand is unable to overpower them. And the move after is telling you that the sellers won, that there's going to be a problem. And then what you see in this is that there's more selling to the downside. Biggest volume in at least 14 ways. So what is that telling you? It's telling you that this is definitely distribution. You see this over and over again. In many of my videos, I've shown this, but basically what they do is they sell on the way up and sell on the way down. This is why you have climaxes and changes of behavior. You know, you could have, say, a selling climax and then change of behavior, which is buying on the way down, buying on the way up, because one side is selling, panic selling, the other side is buying, it's quality buying at low prices. In this case, it's quality selling at high prices and selling on the way up right here, selling on the way down. Then you have a secondary test. This secondary test goes from 57 volume on the prior up wave to only 12 volume, which is what? I mean, significantly lower, less than a third, actually less than a fourth. So, I mean, this is your secondary test right here. You have your climactic or effort maneuver here, selling on the way down. This is your low volume test, telling you what? Telling you the buyers are no longer there, and it's relatively low compared to the prior up wave and the down wave. So that's important to know. The 12 is less, significantly less than 57 and 33. And then you have the break followed by a lower low confirmation with a lower high and a lower low. And that's just a matter of getting in on the retest. Because here the sellers have put a wall. There's like a wall over here. And in order to get above that, they'd have to absorb or break out and take out all this volume. And these guys are already underwater. So the market goes down, has this breakout, test, breakdown, and then here it offers a test of this distribution area. When it offers a test, folks will they'll take the short, but the problem is when it comes back down, and if you have your stop over here, thinking that this is a potential upthrust, that same area gets upthrusted. But this is something that happens quite, I mean, not that much on the Dow, I don't think that much, but in like the ES and other currencies, it would happen. So this maneuver here is to ensure that you get out and to run the stops. That's why it just goes slightly above, and then you see the heavy selling pressure with the biggest brick size and 48 bricks, and it goes down. As it's doing that, there's something going on here in this wave. Um, the market continues to go down until there's a shortening of the thrust and also lessening of supply. You can see it goes 41, 28, then you got the 12s, the 15, the 6, 12s. There's not a lot of pressure. So supply runs out of steam here, and the thrusts, they start to shorten. And you can see that clustering action. And it goes red, green, red, green, red, green, red, green, red, green. This behavior at the bottom of the trend or after a rally on a pullback is indicative of clustered closes, which basically is this similar to that concept in that supply is gone or is evaporated. Because if you're judging supply by the distance, then look at this prior brick 1, 2, 3, 4, 5, 6, right? And now look at these bricks 1, 2, 3, 1, 2, 1, 2, 3, 1, 1, 1, 1, 2, 3. So it's this, and if you're judging by the thrust, it's only 2 bricks lower. This is 1 brick lower. This is 2 bricks lower. So whether you're judging by shortening of the thrust, the bricks in the wave, whatever the case may be, it's very clear that there's a problem here, that supply is diminished. This is different than if you have selling wave and then a buying two buying waves, because this they're still selling here. 1, 2, 3, 4, 5, 6. Here you have repeated attempts, and the clustering in that area is indicative of a lack of supply. And also, sometimes a lot of times there's accumulation in there, but I don't really see very clear evidence of accumulation other than this 1 brick of 18, which is bigger than 1, 2, 3, 4, 5 bricks. Other than that, I don't really see it. After that, the buyers step in. My opinion here is the buyers stepped in for 2 reasons. One, the market went back down to support area, which is naturally where they hang out. That's where the demand came from initially anyway. And second reason is the supply diminished there. So as the market goes to a support area, supply diminishes and demand, who are already looking at that area, enter and they rally the market and confirm. But this is a counter trend move. One of the reasons why it's, I say iffy, but like you have to just be careful is because there's no climaxes here, there's no accumulation, clear signs of accumulation or panicking or transfer of wealth or transfer of contracts. None of that is here. It's just that supply is out of steam and doesn't want to sell at this level. So they might be at higher levels, but they'll be ready to enter. However, like when you see this, you're thinking from that perspective that, okay, there's lack of supply to support level, demand is coming in, but demand will eventually encounter supply at higher levels. That's what happens. Over here, when the market demand comes in, confirms, pullbacks to test, the volume increases. So this is like your first evidence. You could call it preliminary selling or whatever. Why are they doing that? Because again, this is more of a like support resistance area right here. So market goes there, you have some selling, and it's significant. Like this brick here is 49, which is biggest brick at 49 in like our 200 like 200 bricks. So, that's not a normal selling. That's selling pressure to break the market. And market rallies one more time and climaxes here. One of the things that make me think this is a climax, well, besides the selling in the background, you can also tell that there's a shortening of the thrust, meaning there's a little bit of a high. It's a little bit of a high, but look at the volume. So you could tell that there's a problem here because all that volume, what you get for it, shit, you get it's if you count from brick to brick, it's two, but if you count from high to high, it's like 1 brick, and there's a problem right there. After that, there's some selling pressure that comes in. As that selling pressure comes in, one of the key things you notice is that it goes to support, and there's a problem. Why? First of all, it breaks support. If this is demand, why would they let the low be taken out? And have a possibility of price moving against their position. So here, you see it goes all the way back down, goes and breaks the low slightly, making a lower low against this high volume up with a shortening of a thrust. So the way I'm reading this is that there's a problem. There's a legit problem right here because the low was taken out, and if you combine these two waves, forget about it. There's tremendous amount of volume here. It would be it would be I don't know how much, but it's a significant amount. We just about like 80 or 7,900 contracts, something around there. So then the market comes back, it doesn't take out the high, and here is where it's evident that it's going to break. As it subtests resistance, what you see here is a turning point at resistance, and this, that right there should be in focus. Look at the pressure there. Look at the pressure there, 71. So it's game over. It is game over right there. Right there, market, um, this is selling. So what happens is it goes all the way back to the support area. The support area. That, now let's see what happens. So right here, the pressure comes in and takes it all the way to test the low, and demand steps in. You can't really read the zeros because I think they happened on Sunday afternoon. The volume is very light. All right. So what are the key takeaways? One of the key takeaways from this is you are selling on the way up and selling on the way down, and then the break. So that means that the way I view this is distribution, and this is the initial start of markdown. Markdown. We're in markdown right here. Right. The rest is all shit in the middle, which is eventually going to your target. Where I read this here is you have a lessening lack of supply. After that lack of supply, you have some demand that comes in, confirmation, until there's some sun pressure which causes a full effect. Then it seems like this is